Stocks finished a wild week, mostly down on Friday. The Dow Jones and S&P both ended up losing ground, while the Nasdaq made modest gains. With one trading day left in 2018, it's looking like all three major indexes will finish the year as much as 7% lower than where they began. For more, we're joined by Brian Sozzi. He's editor-at-large for Yahoo Finance. Brian, good morning.
Morning.
We actually had the first positive week since November, but we're dealing with massive volatility in both directions here. And what's that indicative of?
Yeah, it's been one wild week on Wall Street, and actually wild month. Stocks are well off their highs since October, but there are a couple things here at play. We have no trade deal. We have President Trump tweeting against negative things against the Federal Reserve Chairman. Now, the Federal Reserve is an independent body. But above all else, we just had companies that just got valued too much relative to how much they might earn in 2019. And Wall Street has taken a step back and said, hey, you know what? Let's take some money off the table and let's enter 2019 with a little more cash than the normal.
What does all this mean for investors?
Yeah. Well, for investors, I think they're learning that this is a normal stock market. Stocks don't go up
all the time.
Yeah, stocks don't go up every single day. And sometimes you will see what we call air pockets in the market as Wall Street realigns what companies are worth. But this is very much normal. But it's also important to note this is not a financial crisis. This is not 2009 all over again. Banks are not giving out risky loans. We've had a lot more regulations here. So this is very much normal, believe it or not.
Yeah, as my father used to say to me, you kids today think things never go down.
Wise man right there.
That must come down.
Moving on to a big story this week, Sears announcing it's closing 80 more stores. What's really behind this? Was this bad management at hand?
Yeah, this is absolutely dreadful. And I compare Sears to a zombie. You know, they've had their arms cut off and they're just walking around trying to stay in business at this point. What is to blame? One man, Eddie Lampert. He was the largest investor in Sears. He's the one that created Sears and Kmart in 2005 when he merged them. He has been a terrible CEO. He has not invested in the company. The stores have fallen apart. And where are all their customers? They're now going to Walmart.com.
How do you really feel?
Well, yeah, well, just leave it all on the table. I've been watching this for 10 years, and Sears is akin to like an ice cube. They've been melting for the past 10 years, and the story is being told in the stores.
We saw Toys R Us last year in a similar fashion. Are they similar, or are these two different stories?
In a way that these are retailers that lost their way. But the big differentiating factor here is that Sears was the Amazon of its day. They were a leadership, the catalog, the history, and they were not able just to carry that on for the next generation of shoppers.
Such a huge loss for so many people.
For workers, for pensioners, there's a whole other story
here. It's been a very slow death for them, and it goes back a long way. And they've had a lot of opportunities to try to stop this and haven't been able to.
Yeah, what a partnership. Brian Sozzi, thank you very much.
Thank you.